In the markets, the candles do not move first. Your mind does. People think Dow theory is about trends, phases, confirmations, and averages. But Dow's true genius was not in charts, it was in human nature. He realized the greatest battle in trading is not fought on the screen, but inside the trader. And that battle begins long before the first trade is taken. Imagine this clearly. A trader wakes up, opens his chart, and believes he is analyzing the market. But in reality, the market is analyzing him. Every hesitation, every fear, every hope, every emotional weakness is reflected instantly in the way he looks at price. Dow understood this. He knew the market is nothing but a living organism of human emotions. Fear piled on top of greed, patience battling impatience, confidence breaking under expectation. You fail before entering a trade not because your strategy is weak, but because you are not ready for the truths the market is about to show you. You see a trend, but your mind sees opportunity, danger, desire, and uncertainty. You draw a line, but your mind draws a fantasy of quick profits. You watch a candle break structure, but your mind breaks long before the candle does. Dow wrote about primary trends, secondary reactions, and minor fluctuations. But behind those words was a lesson. The market moves in its rhythm, but the trader moves in emotions. Every beginner believes they enter the market to make money, but Dow would smile at that idea. He knew the market's real purpose: to expose who you truly are. It tests your character, not your chart knowledge. It tests your patience, not your indicators. It tests your discipline, not your predictions. The reason most traders fail before entering a trade is simple. They come to the market with a broken internal foundation. Impatience controls their heartbeat. Ego makes decisions for them. Fear whispers in their ear. Hope blinds them. Greed pushes them forward, and regret pulls them backward. Before the candle even forms, the trader's psychology is already collapsing. Think of how many times you've analyzed a perfect setup. Everything aligned. Trend direction clear. Market structure flawless. But your mind said, what if it reverses now? What if I lose again? What if I'm wrong? And that tiny voice, that soft hesitation, becomes louder than any chart pattern in the world. Dow knew this voice. He had seen it in every investor, every trader, every speculator. He understood that analysis alone can never silence fear. Only discipline can. Only acceptance can. Only surrender to the truth of the market can. And the truth is brutal. The market doesn't care about you. It only reflects you. You think you're entering a trade, but what you're really entering is a psychological tunnel where your weakest traits amplify. If you are impatient, the market will frustrate you. If you are greedy, the market will tempt you. If you are fearful, the market will attack you. If you are arrogant, the market will humble you. If you are emotional, the market will tear you apart. If you lack self-control, the market will expose it instantly. This is why the majority fail even before the entry. Their mindset is already defeated. Charles Dow believed that trends continue because human behavior continues. History repeats, not because time cycles, but because emotions cycle. A trader who lost yesterday will hesitate today. A trader who won yesterday will overconfidently gamble today. A trader who missed a move will chase. A trader who is afraid will freeze. A trader who is pressured will overtrade. The market doesn't punish you for your mistakes. It punishes you for refusing to recognize your psychological patterns. Many traders come to charts hoping for certainty, but Dow taught something painful. The market is never certain, only understandable. You must read it, not predict it. You must follow it, not control it. You must flow with it, not fight it. You must follow it, not control it. You must flow with it, not fight it. But most traders enter the market with a need to be correct, not a need to be disciplined. And this is the reason their entries fail long before the candle even touches their price. Dow used to say without saying, your job is not to catch tops and bottoms. Your job is to understand direction and respect it. But the modern trader feels the opposite. He wants to be the hero. He wants the perfect entry. He wants the perfect moment. He wants to catch the extreme. He wants to prove his skill. He wants to feel superior. And in that desire, he loses. Because the market rewards humility and destroys ego, a humble trader waits. He studies, he respects the trend. He confirms direction. He accepts uncertainty. He doesn't fight the flow. He doesn't rush the process. But the ego-driven trader wants action. He wants thrill. He wants movement. He wants dopamine. He confuses market noise with opportunity. He confuses randomness with setups. He confuses impulsive entries with strategy. And by the time he presses buy or sell, his loss was already written long before he entered the order. Dow's writings teach one silent message. You cannot trade the market until you learn how to trade your own mind. Think of the fear of missing out. This fear forces traders to jump into trends that have already moved. Not because the market called them, but because their emotions screamed louder. Dow Theory says trends move in phases: accumulation, participation, distribution. But psychologically, traders move in impulses: fear, greed, hesitation, panic. When a trend begins, most traders are scared. When a trend continues, most traders are uncertain. When a trend matures, most traders are late. When a trend ends, most traders finally enter. This is the tragic cycle Dow understood. The late emotional entry is not a trading mistake. It's a human mistake. Dow Theory says markets discount everything. Every emotion, every belief, every expectation is already priced in. But traders still believe they know better. They believe their intuition is special. They believe the candle will move because they want it to move. They forget the market doesn't move based on individual desires. It moves on collective psychology. And the sad truth? Most traders don't lose money because of bad analysis. They lose because their minds are not prepared for war. They lose because they carry emotional baggage into every chart. They lose because they want comfort, not truth. They lose because they want control, not understanding. They lose because they want profits, not discipline. A trader becomes dangerous not when he learns indicators, but when he learns himself. Dow understood this transformation. He knew a trader becomes powerful when he becomes neutral, when emotions no longer drive decisions, when hope does not enter, when fear does not whisper, when greed sits silently, when impatience dies, when ego disappears, when the trader looks at price and sees not opportunity to win, but responsibility to follow. The entry is not the start of the trade. The entry is the result of a mindset. If the mindset is broken, the entry will always break. If the mindset is disciplined, the entry will always align. The market is a mirror. It reflects who you are, not what you want. If you are anxious, you will see danger everywhere. If you are greedy, you will see opportunity everywhere. If you are patient, you will see structure clearly. If you are disciplined, you will see the trend truthfully. In the end, Dow's greatest lesson was simple. You do not trade the market. You trade your own psychology against the world. And until a trader understands this, he will keep losing. Not at the exit, not at the stop loss, not at the mistake, but at the very first moment he opens the chart.